Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Santosh Nair.
Well, Santosh, this time around, right after budget, yesterday we had a flat close, but today, we hit a fresh record high of 22,126. This is the day after budget. Looks like the markets were really still digesting the budget announcements, right? There was strength all across markets. Mid and small caps were also in fine fettle, but oil and gas back, Santo. 3% kind of uptick on the index, and BPCL, 10% uptick. And, if you look at the other stocks like Reliance Industries, ONGC, they were all contributing to today's up move, right? Although we did end off the day's high, but still, a day after budget, interim budget, so to say, we've managed to hit a fresh high. Among the gainers, you had the likes of BPCL, ONGC, Power Grid, Adani Ports, Coal India. And on the flip side, you had a few losers in the form of Aisha, HUL, HDFC Life, Axis Bank, and some of the private banking names like HDFC Bank as well. But Santo, let's bring on board our guests to discuss, what is it that's, providing such a fillip to the markets, especially since markets ended on a flat note, at least on the interim budget day, right? So joining us is Aishwarya Dadhich, of Fident Asset Management. Great to have you on the show. Aishwarya, would you call it the budget effect, hitting a fresh high a day after the interim budget?
Good afternoon, Nandita, and good afternoon, all the viewers. I would say that something very interesting happened when we heard the budget yesterday. Initially, when you look at the debt market, which possibly immediately had a positive reaction after hearing that magical number of 5.1 on fiscal deficit, and we saw that 10-year GSEC of India went from almost 7.1415 to almost below 7.05, and that was like a very bullish scenario for the debt market. Equity market took some time to digest because they were trying to understand whether the expenditure growth was a matter of concern, or possibly the kind of growth on a lower base we witnessed last year was possibly missing in this particular year, and that's why market was in a confused state yesterday. But when we saw the numbers and in detail, what really market appreciated was the continuity of the whole momentum of government thoughts and policy. Even we saw that on the expenditure side, there was almost 11% increase in capital expenditure. We look at defense, rail, railways, things like that. And the best part for people was the no big changes. That simplicity which this government brings to the table. I think the market rejoiced it today. And one more thing which happened, which I believe supported the market today, was global risk on sentiment also built up over the last 2 days. So after the Fed made, you might have noticed that even the US 10-year from more about at 4% has gone down below 3.9% in the last 2 days. And same thing is happening on the dollar index and other risk indicators. So I think both the good set of budget, I would say decent set of numbers so far, and plus the global risk on sentiment has all contributed to the today's market movement. And even if we see this week, which was expected to be very volatile given the context of so many events happening, ended up on a good note, almost 1% higher for this week. And when we have seen that broader market has actually outperformed the large cap, so which is pretty interesting in my assessment.
Well, Aishwarya, the bank stocks, the bank index could not sustain at higher levels, and that finally ended in the red. This despite the fact that the budget announcements are at the margin positive for bank, at least definitely for PSU Banks. So what is the big market concern there? This is one sector that has not been performing over the last couple of weeks now.
Yes, Santosh, and if you look at this quarterly results also, so I would not say that bank, especially the private banks, have reported bad numbers. That's not the point. They have reported pretty decent numbers. But in spite of that, we have seen strong drawdowns in the banking stock because the whole narrative about the future came into questions. Whether it's about the CD ratios, about the NIM expectation, the possibility of deteriorating in asset quality and things like that. And that is what has been putting pressure on banking stocks lately. And even if you look at in this budget, what we heard about the most important thing for the budget was obviously was the capex growth, which will sustain. But as I spoke earlier, that this borrowing requirement, both gross and net borrowing, were much lower than what the street was expecting, and then we saw a strong, I would say, a decline in 10-year GSEC of India. I think it favors most toward the PSU Bank And that rotation has possibly happened today and yesterday, that investors are starting to chase PSU banks, where when you look at the number of BOB results, and other PSU banks, they were fantastic, if I may just use a word. And when you see the valuations compared to other private players, there is still, a decent amount of valuation gap. And on top of it, when you saw that, there is a strong decline in GSEC over the last 2 days, which we all supported the PSU bank. So both yesterday and today, we have seen a strong traction in PSU banking stocks. But that rotation has created some pressure on the likes of Axis Bank and SDFC and things like that. So having said that, I would say that, it's the narrative which has been impacting the banking stock. But given the formula of the market, given the valuations, I believe value still lies in banking stocks, Santosh.
Nandita.
All right. So, of course, there was a push for affordable housing as well in the budget, right? So, do you think the next big theme could be looked upon as this particular space? Do you think that would emerge as a big theme now going forward?
Definitely, Nandita. We are very, very positive on housing, especially the mid-sized housing. And if you look at the play into that particular segment on the credit side, so you can play two ways. First, obviously, is the credit side. We have players like, Aptors, we have players like Home First, we have very efficient players like ours, whose valuations of these entities have also gone down over the last 1 or 2 years. So valuations risk reward is pretty exciting from that perspective, and growth, obviously, the whole concept of India's story plus the government focus on spending on housing will create a very right pivot for these companies to maintain that growth. So I believe housing finance companies is one sector which obviously is also low risk compared to MFIs and even vehicle finance companies, and that should be a core part of the investor's portfolio. If I have to play the devil's advocate, the only area of concern is obviously the competition and the ability to maintain NIMs when we will see that there will be interest rate cut going ahead. And so that's why it is very important that investors stay with those housing finance companies whose liability franchise are the strongest, whose dependence on external borrowing is the least, and who have shown a very, I would say, a consistent asset quality norms for the last 5 years, 10 years, especially during the times of COVID. So I think that could be one very interesting area for investors to look at, and HFC is on top of our mind.
Aishwarya, IT stocks appear to be making a good comeback. Numbers from some of the main companies like TCS, Infosys and Wipro were better than expectation. But as for the rest of the pack, it seemed to be pretty much a mixed bag. How are you looking at this sector now? You think there is still steam left?
We at Fident are very, very positive on IT as a sector. Now, if you look at this quarter results, we all know that this is a seasonally weak quarter. And I would not say that we have seen great set of numbers. The numbers more or less, if we put aside Wipro and SL takes and things like that, I would say we have seen kind of a muted performance on IT operation parameters. But if you have seen the stock prices movement has been very, very strong. Majority of the stock has gone up between 5 to 10% over the last month or so. I think it's because of the narrative which is changing. So it is just opposite what is happening for banks. For banks, which they've reported decent set of numbers, we have seen that the forward-looking narrative is changing adversely, and that's why we saw a pressure on banking stock. Just the opposite which happened for the IT stock this quarter, where they've reported decent set of numbers or slightly muted numbers, but the expectations of revival on consumer spending and on enterprises spending in US and UK and European region is possibly got a lot of interest from investors, and we saw those IT stocks performing very well. Like Mphasis reported numbers yesterday, and they were nowhere near. I wouldn't say they were a good set of numbers, but because of this mixed bag and because of the expectations revival, we are seeing a lot of interest for IT stocks among investors.
Right. I want to also get in your thoughts on Paytm after RBI's crackdown on Paytm Payments Bank, right? Do you think, this poses a big risk to the business given the fact that at least profitability timelines will get elongated, right, here on?
I would not like to comment specifically on this company, but if you look at history and if you look at previous events where when RBI have gone against some particular business, or because they are not very confident about their processes or things like that, I would advise investors that it normally have taken time in the past, right? So possibly the valuations might look very attractive, but to bring things in order it might take at best 1.5 year or 2 year before the management checks all the boxes and try to get sure that the business momentum and continuity is there, and to RBI and other regulatory things to get confidence on that. So it won't be a long run process, Nandita. I believe anything in a hurry might not be very remunerative for investors. So investors have to be very, very watchful about that. That's my only caveat here. I don't want to discuss more on particular business at this part.
Fair enough, Aishwarya. But on that note, I'm afraid we are running out of time. But would like to thank you for taking out time and joining in this afternoon and sharing your thoughts with us. Well, with that, we've come to the end of this edition of Closing Bell. But of course, the programming note, stay tuned for the exclusive FM interview with Network 18 Editor-in-Chief Rahul Joshi at 4 p.m. coming up. So don't forget to tune in for that. You cannot afford to miss that. But with that, it's a goodbye from me and Santosh. Thanks a lot for tuning in. Stay tuned to Moneycontrol.
Big budget exclusive. In the most comprehensive budget interview, Nirmala Sitharaman takes you beyond the rhetoric and talks about the road ahead. In conversation with News 18 Editor-in-Chief Rahul Joshi. The FM interview, live and exclusive